Sit. Sing.
Ladies and gentlemen, your attention please. Good morning, everyone. How are you doing, sir? Well done. The mouth is for eating, I'll leave you to it. How's everybody doing this morning? Wet. That's one way of putting it. How are you doing, Alan? Well done, sir. Well done, sir. My name is Moses. I am your host today at the Kampala Blockchain Summit 2024. And I feel like we need to do a couple of exercises before we dive into the meat of what has brought us here today. I have a couple of volunteers who have most graciously agreed to help me. That's Sarah, Brenda, Linda, Marvin. Sarah, can I have mine? This belongs to me. Aha, very good. You have yours? Very good. Please fully give it to me. Here we go, here we go. One last one. Thank you very much. They've been most gracious to write me down a couple of questions. And these questions are about anything under the sun. So today we have a very simple exercise. When I hand you this question, I want you to answer it as best you can. I'll start with you, sir. Take your time, internalize it. You have one? Take your time, internalize it. You look very eager, madam. I'm going to give you a question. Take your time, internalize it. I need one more. I need one more. Disappeared. Andrew? I need one more. Here you go, sir. The rules are just answer the question as best you can. That's all. I'll start with you. You read out your question and you answer it. Tell us who you are.
So the question is...
Tell us who you are.
Oh, sorry. My name is Mebom Cimenta. I am a talent at Groundbreaker Talents. So the question is, why do we remember some moments vividly while forgetting others, even when they seem important?
Why do we remember some moments vividly and forget others, even if they seem important? Is that right? And why is that?
It's quite deep, but I think it goes in so many directions. For example, some moments, the brain puts away some moments as a form of protecting people from trauma. So some moments will be forgotten. And then others will be very beautiful moments that you can't forget. And then others will be moments that are easily triggered from the past by so many things, like by the lives we live and all that. Such moments are triggered, like
so like a defense mechanism for us, eh?
it's like a defense mechanism.
Okay. So we started off with an existential question. Let's see what the next question is. You have one, sir? All right, cool. Tell us who you are and go for it.
Good morning, my name is Patrick. The question is, why would a company or sector choose blockchain? I don't really think it's a choice. If you want to compete, you need to continuously improve and innovate. And what we are seeing in our, in our region, in our part of the world, is the technology improves exponentially. Right? You're all following what's happening with AI now. We've had quite a wave with blockchain in the last couple of years. It kind of flattened a bit, right? At the same time, we believe that the potential has not really been fully used yet, right? And I think AI is actually a trigger event now for blockchain to use its full potential. And so, to cut a long story short, you should care as a company to remain competitive and to increase your competitiveness continuously in order to get a bigger market share. And I think that's a big opportunity for Uganda, for East Africa. You have a history of leapfrogging. So why not just do it again with Web3 technology?
Thank you, Patrick. Usually there's applause that follows an answer. Thank you very much. You have a question, sir. Tell us who you are and go for it.
Good morning. I'm Jehovah Jonathan, Kite Pesa lead, project lead. My question was, why is blockchain adoption important for every business or individual? And to lean on what he said, it opens up a new universe of opportunities for businesses. If you don't, someone else will. So in order to keep up with what's happening and to provide more innovative solutions for your customers and your business partners, it makes sense to use blockchain. Yeah.
Thank you very much, sir. And I'll let you have the last word.
Hi, I'm Thomas from BSV Blockchain. I have a weird question because it's not related to the previous one. So my question is, why haven't aliens visited us yet? So that's a tough one. I would say that, I don't know, maybe they already did. Some of us might be aliens. Yeah, how do we know? I have my colleague here is sometimes has very weird behaviors, so that might be a hint.
Thank you very much. Take me to your leader, sir. All right, thank you to everybody who participated. It's time to get our ball rolling here at the Kampala Blockchain Summit 2024. And please help me to make welcome a man who is a finance professional. He is long in the tooth in all things blockchain, in all things tech. He is the current president of the association. He is a financier who started Capital Savvy in 2019. And to show you how ingrained he is in all blockchain, take a look. You talked about Kite Pesa. You're the lead. Allow me to help welcome the man behind Kite Pesa and Capital Savvy. Please put your hands together for Reginald Tumusiwe.
Hi everyone. It's a pleasure to host everyone who's made it despite the rainy morning. You all look good, happy, excited, very energetic, and that's the kind of spirit we need. And so welcome to Kampala. For those of you who've had to travel far and wide, Thomas, Patrick, Alex, Bolo, and the rest of the team, my good friend Angus as well, thank you for making it to this great summit. It's a pleasure to be here and to host each and every one of you at the second edition of the Kampala Blockchain Summit. When I look around the room, I cannot help but be very grateful to God who has enabled us to achieve this great summit so far. I'm reminded of a great Jewish leader in the times of Christ who walked to Christ in the night and said, Rabbi, no man does these things except God be with him. We couldn't have pulled this off in 3 weeks of planning, in less than 6 months of being in leadership as your president with the rest of my colleagues, had it been for the hand of God. So we thank him greatly. So today's conference isn't really about blockchain or emerging technologies per se. It's about sub-Saharan Africa and the young people who in the coming decades will contribute over 25% of the global working population. Sub-Saharan's working age population is growing quite rapidly, while the rest of the world is flat or almost declining. The question is, are we as sub-Saharan Africans ready to participate in the workforce? And so the summit is about preparing our young people for a world that is changing at lightning speed, and with many struggling to find their footing or their place in life. This is a call to my fellow young people to increase productivity and to be useful in a world of technology. And like my friend Patrick put it earlier in his quick questions, we have an opportunity as sub-Saharan Africa to leapfrog, to be ahead of the curve, and to take advantage of the great success we've seen elsewhere in the world. And just to give you an example of how important productivity is, if we as a region increase our productivity growth to the levels similar to those of India, which we all continue to celebrate today, which is almost 3 to 4% for the next 25 years, our share as a region of global output would grow to around 10%, and our share of global growth to that of 20%. And so this is how important it is to convene such young people in such summits so that we do our part to increase productivity of our young people. And so what we are focusing on is a mindset shift. We're not reinventing the wheel, we're just changing our young people's mindset. And this can already be demonstrated with the venue we've chosen, the coziness in the room, high quality people, high quality panels, as you'll see later in the day, with lots of interesting themes, spanning technology, coffee, creativity, regulation, fundraising, academia, development finance, tokenization. And so this is an opportunity, just like the venue has demonstrated to you, to reimagine a world where each of us contribute greatly to the future of our region and to the future of our children. And so when the summit is over, we will almost nearly be at the beginning of the work that is ahead of us. We will have a lot to deal with, from regulation to mindset, to empowering young people, to helping young people raise money, to the right education skills, to the right mentorship programs. We are just getting started. But I'm convinced that we have what it takes as a young people, as the leadership that you've entrusted us, to do our best to achieve great success. And so this is a call for us to be deeply enthusiastic about the opportunities in Africa, about the opportunities ahead of us, and about the challenges we continue to face in Africa. And so I would implore you to take advantage of such rooms, such people. You'll meet financiers. You know, one of the anchor sponsors, the BSV Blockchain Association, I've had the privilege of speaking in different conferences, including the just concluded London Blockchain Conference. And through such opportunities, I met great people, some of whom have traveled far and wide, but also I've utilized such opportunities to raise money and resources to a tune of over $1 million to support a lot of other projects that you'll hear about within our innovation lab, such as Kite Pesa. And so I encourage you to take advantage of such opportunities, to meet people, to interact with people, to get to know what everyone is up to. So this is not just about the coffee, about the seats, about the glamour. It's about engaging and interacting with each other. I would like to appreciate our partners who have enabled us to do such a summit. The BSV Blockchain Association, represented by Thomas. Thank you, Thomas, and your team. I would also like to extend my appreciation to Enduro Coffee for such a fantastic venue. Gloria is a fantastic lady, and she said to me, Reggie, I don't know what it is about you. I've never hosted people in this place, but be it unto you, according to God's word. So thank you, Gloria, for supporting us and for such a fantastic atmosphere. I would also like to extend my appreciation to the CFA Society of East Africa, represented by my friend George. Thank you for making time. And one of the reasons we chose to bring in the CFA Society of East Africa is to demonstrate that beyond the narrative around blockchain as we know it, academia is keen. For those of you who've had the privilege to be students of the CFA program, you will know that they've involved a lot of work around blockchain within their curriculum. And so thank you for making time and for supporting us as well with all your efforts. I would also like to thank my employer, a company that I founded, for enabling me to spare some time to do some work for impact within the Blockchain Association of Uganda. And so thank you all for being here. Last but not least, behind every great man or every great institution is a team that spends sleepless nights. And that team has been led by Awel, who has been our summit coordinator. Awel, thank you so much for putting together such a fantastic team and for supporting me in all the work that I've done over the years, and not just the summit or not just the work we're doing at the association. So thank you to everyone who supported Awel. Allow me not to go name by name, but you know yourselves, and you'll have an opportunity to say some remarks at the end of the summit. So thank you so much, and may God bless all of us, and may we enjoy ourselves, may we interact. I'm glad it's raining because then it keeps everyone in the room. So there's no rush to leave. In any case, the room will keep getting, full and full as we go by. So thank you so much for making time, and I wish us great success today. Thank you.
One more time for Reginald Tumusime. Reginald, before you go, you spoke about the venue that you chose for the summit this year, and I think it's quite interesting that we are in Ndiro. I'm about to shamelessly plug them. Gloria, you are still the only cafe that does bottomless coffee with breakfast. Long may that continue. Please give it up for Gloria. I see that the theme is about unlocking opportunities in Africa through blockchain. You chose a coffee shop for your summit. If you explain how blockchain can be useful to a coffee shop, for instance, to a newbie, how would you explain it?
That's a very good question. So one of my bullet points in my pitch deck to Gloria to convince her to allow us to be here. If you are a coffee exporter, you will know that effective sometime next year, we will not be allowed coffee to any country within the European Union that isn't traced back from its roots. And one of the reasons they are doing that is to ensure that the source of our coffee is not land that is deforested. And so this whole climate change. So traceability is one of the interesting use cases for coffee, but also an entrepreneur like Gloria would be interested in giving back to her customers through loyalty points.
That's what I was talking. Gloria, you hear that? Loyalty points.
So things like loyalty
cards, blockchain.
Yeah. So how do you put every purchase of your client on a blockchain, and then use that information or data to reward them with an extra cup of coffee? And so those are interesting use cases that we could think about in relation to coffee.
Okay. I do love responsible agricultural practices, but I also love free cappuccino. Gloria. One more time for Reginald Tumusime.
Thank you very much.
Thank you very much. Onwards with our program. I'm going to ask Timothy, we have a very special presentation from a man who is at the forefront of policy and advisory at CFA. So Timothy, are we good to go with there? We have with us, please direct your attention to the screens. We have Mr. Olivier Finesse, who is the Global Head of Advocacy and Policy Research, CFA Institute. I know he won't hear it, but please, some applause. Good morning, Olivier.
Good morning. Can you hear me?
Olivier, good morning.
Good morning. Can you hear me?
Just give us 2 seconds. You'd think that after 4 years we would have sorted out our Zoom issues, but give us a second. We're going to get you on. We have Mr. Olivier Finesse from the CFA Institute. He is the Global Head of Advocacy and Policy Research. And once we clear up our sound issues, he will be with us. Kindly bear with us. Once again, thank you for coming on time, regardless of the rain. We have coffee at the entrance and a bite as well. We have an awesome program for you today, courtesy of the Blockchain Association of Uganda. And we're going to have a lot of fruitful discussions with our panels. For now, though, the floor is for Mr. Olivier.
Can you hear me? Hello, can you hear me?
Loud and clear, Olivier.
Perfect. Thank you very much. It is a pleasure to be amongst you all today. When Alan and Reginald reached out for this opportunity, we thought this would be the perfect setting to align our joint interest in the development of what we call digital finance. And so today, what I would like to do is to take you on a similar journey the CFA Institute took in the development of digital finance, how it can be used, also what the risks are that we should consider, and how regulators should approach, we think, this development. I will now share my screen as I have a few slides to show. Can you ensure that I have the capacity to share my slides, please? Or can you put up the slides for me, if that's possible? Hello, I still cannot share my slide. I'll just wait until this is made possible.
Olivier, we can see your first slide, the rise of digital finance.
So I will start talking anyway until the tech issues are resolved. And what I wanted to start with is to explain that digital finance has not been an easy development for CFA Institute, but also for the financial community as much as for regulators. For the first time in a long time, or forever actually, digital blockchain crypto has been a development that started from the ground up, as opposed to products that were pushed from the top to the bottom by financial institutions. And when that happened, we were not sure how to take this development, how to comprehend its reach. And so for a long time, we did not consider digital finance as a serious development worthy of our attention. That has changed around 2021, when we saw the pervasiveness of digital finance, and we decided to approach it as prudently as possible, starting with partnering with external researchers that analyze the mechanisms underpinning Bitcoin, for example, and also the other forms of cryptocurrency, such as Ethereum, that were allowing for more advanced smart contract-based processes. So if you could, it's working now. I'm going to share my screen. Right. So I assume that you can see my screen right now. So we will carry on with the presentation. So this is what I was telling you. Digital finance has been a chaotic development. It started from the ground up as opposed to top down. And we were wondering if this was going to be a structural change. If you look at the ecosystem itself, it's quite complex. Reginald was on stage just a few minutes ago to explain a particular use of blockchain, but in fact, blockchain can be used for many different applications, cryptocurrencies, investment funds, derivatives, decentralized finance, lending and borrowing. And I'll be discussing today as well the concept of the tokenization of the real economy. So it's a complex ecosystem that is very much not linear, and that's why it's causing lots of non-linear problems for participants and for regulators. And so at Institute, the way that we approached this development back in 2021, as I was explaining a second ago, was to team with external researchers and to just analyze what was going on with Bitcoin and Ethereum. In 2023 was our first foray deeper into the matter with our own original research. And we decided to focus on three aspects: investor protection, market integrity, and professionalism, so that we could demystify digital finance and crypto assets for a traditional investor base. And that is important to distinguish the origin of crypto, which is very much a ground up enthusiast fintech, but the connection with the reality of finance was difficult to establish, right? And the concept of fiduciary duty is absolutely paramount for the Institute and for finance in general. In 2024, we delved deeper into some underlying concepts like valuation, central bank digital currencies. And next, our next piece that is coming out this month or next will be on tokenization. And I think this is where the potential for blockchain is probably the most interesting, in the sense that this is where you can actually get to optimize and automate most processes, reduce costs, and increase operational efficiencies. But there will be issues to consider: custody, cybersecurity, financial inclusion. We'll discuss that in a second. Data privacy and gamification risks. So I won't spend a lot of time on this, but if you are interested, here is the timeline of the work that we produced on digital finance, blockchain, and crypto assets, starting in 2021 up to 2024, with our valuation guide for people who would like to know how you can actually value these things. This is an interesting guide on the potential methods that you can use. And next, as I was saying, tokenization, which I think, to me, is the ultimate potential for blockchain to play a role, an actual real role between the economy and financial markets. So the three original questions that we were asking ourselves as regard crypto assets and digital finance was basically regarding how you value it. Not clear how you value something that didn't have clear cash flows or balance sheets. So what were the metrics that we should use? How custody works in finance. It's very important that segregation of assets be established. We've all seen the FTX debacle. And so we've always said, if digital finance is going to work, you need to be absolutely clear about the segregation of client assets, safekeeping rules, and custody regulation. All in all, that coalesces into the concept of fiduciary duty. If you're going to recommend such investments, you need to understand the risks, you need to understand the business case, so as to explain it to a non-sophisticated audience. That is absolutely critical. There's nothing special about digital finance that says it should be treated differently. We considered the potential benefits, and as we researched the development, they gradually appeared, right? So, and Reginald touched upon these concepts earlier, but workflow automation of investment management operations is becoming clear. The concept of smart contracts is very promising. Lower operational costs because you are shortening the operational chain. Something that is dear to my heart, whether we can actually transform those gains into financial inclusion gains through lowering operational and administrative frictions. Again, this term was mentioned earlier. I think this needs to happen if we want to reap the benefit, the full benefits from digital finance. Decentralization of tasks that are currently monopolized by traditional financial institutions, which could lead to the democratization. Another term is retailization of access to non-traditional investments for retail investors through fractionalization and tokenization. It's not a difficult leap to make that if you allow democratization of access to investments, it also allows democratization of access to funding for small and medium enterprises, for example, taking us back to the concept of financial inclusion. The question will be whether these will be justified and verified by the reality of the market's development, and this is where we need to be vigilant. I wanted to make a case here for Africa, and Reginald mentioned a few points earlier. it's not yet absolutely clear, but there's a few points that are very clear, which would make digital finance a very serious and compelling business case in the Africa region. The WEF has established that Africa is the world leader in terms of mobile banking, right? In other words, it is probably easier to have access to a mobile terminal than a bank account in this region. And so a case can be made that digital finance is the continuation of a trend which will only take advantage of access to existing mobile services, right? And when you consider that only close to 50% of the population has access to traditional banking services in the region, then it's an easy conclusion to make that you can use digital finance to increase financial inclusion. Now, the question will be whether this is a too easy a conclusion to make, because there will be social, financial, and commercial infrastructure discussions to be had. We've seen the issues in Nigeria with the e-naira, for example. So it's an easier case to be made than it is a reality to be seen. But clearly, the building blocks seem to be promising there. So let's go to what we thought regulators should worry about. When it comes to crypto, this is very much a decentralized and stateless sort of development, right? And regulation is still unclear on this. We also don't know what really they are. What is a token? Is it a security? Is it a commodity, a currency? What are the risks for investors? There's a big problem. If it is decentralized, who is responsible, right? Who do I call if there's a problem? That is an issue from a regulatory standpoint. Who's driving demand? What are the real economic benefits? And I'm sure your conference today will clarify some of those points. We need to establish more clearly what you can do with those offerings. Property rights also, this is something I'm discussing at various levels, international and local. How do you enforce ownership rights if also you do not know necessarily who is the responsible entity? And finally, this is a concept that we are discussing with institutions such as the FSB, the IMF. What can be the ramifications between traditional finance and crypto finance when it comes to financial stability and systemic risk? We are not yet clear what those transmission mechanisms can be between digital and traditional finance. This will need to be also looked into. I wanted to show you quickly, we won't go into the detail, but what I meant by regulation is unclear is also that you have conflicting interest when it comes to crypto. Treasury departments will be interested in having as many entrepreneurs established in their jurisdictions for the tax dollars that these bring, for example. However, regulators, on the other hand, will want to ensure that sufficient guardrails are established to guarantee investor protection and market integrity. So when you consider not all the frameworks are present on this slide, but important ones are, because they show that you can go in different directions. The EU has moved first with the most advanced, or at least the most deep-rooted proposal on crypto, which actually created an entirely new rule book on crypto. US and UK weren't sure they were going to go down the same route. UK has proposed to actually integrate crypto and digital within the existing set of financial regulation, and determined that they would determine later on if they should create new rules specific to digital. And the US, for the time being, is still very much in waiting mode. I think you can expect them to be wanting to be somewhere in the middle. They don't want to recreate necessarily a new rule book, but at the same time, if it's necessary, they would. And the question in the US is whether this should be considered securities under SEC jurisdiction, or if there are more commodities, right? So under CFTC rules. So you can see how this is still very, very fluid. And I would encourage you all to think about how you can propose in the African region, in the key jurisdiction in Africa, regulatory frameworks that work locally, but don't lose sight of those international developments. So our recommendations at that point and that was probably in 2022. We had a few sets of recommendations for institutions, fiduciaries on one side, people who propose digital finance services, and regulators on the other side, right? It's never good to use hype as a basis for an investment case. The traditional rules of sound portfolio construction continue to apply. You probably should keep an even stricter eye for the business model. And I've seen many different business models where there wasn't very much there to be honest. And the custody aspect, it sounds boring, it sounds geeky, but this is absolutely critical to ensure the safe distribution of such services, right? So custody and safekeeping of client assets. This was our probably most important message to the industry. Now, for regulators, we thought that they should be worried about harmonizing regulation. It will be very difficult for digital finance to work if regulation in country A, B, and C are completely different. We need to clarify the different nature of tokens, crypto assets. Technology neutral is always also very, very important. You don't design regulation based on a technology that might change in the future. Custody rules should be defined, and they should take a look at how risk might be building up in the system. Right? So these were broad messages that we want to take back to the industry and to regulators. Now, if we go straight into the concept of tokenization, which I think is the closest to the point of this conference. In other words, how you transform distributed ledger technology, right, into investable products that you can then distribute also digitally to an interested client base. This we thought after our first piece of work that blockchain as such, DLT, as a technology was probably a more interesting proposition than crypto assets themselves, like Bitcoin, right? Because it allowed for way more development and way more connection between the economy and financial markets. A distinction exists between investing in that technology as opposed to acquiring the digital assets themselves, right? And we've seen lots of firms that were still investing more in the technology than trying to simply create the next Bitcoin. And fractionalization of complex assets, this is something that we're looking into at the moment, because in a world where more and more of the financial risk will leave pension funds or companies and be forced upon savers and individual savers, it will be important to ensure that those savers have access to a wide panoply of potential investments, notwithstanding the potential problems with how they might be in a position to understand what they are purchasing. But the technology might allow for this democratization. I wanted to show a few pieces of information. This is a document that I have not had time to update, but it's still the same picture today. What we wanted to show in this report is that, in fact, contrary to what you see, we all see in the press is mostly interested. Bitcoin gets a lot of attention, but in terms of transaction volume, it's actually quite low. And what has gained in importance is all those smart contract enabled coins, right? So all those coins that are used to effectuate tokenization, right, and automation on the blockchain of processes leading to investments. That is what I am particularly most interested in, right? So smart contract enabled coins and stable coins also at the same time. We will be releasing such figures as part of our tokenization report, but this is also, we wanted to show what the market looks like right now. And it's already a big market, and it is progressing. So there's a mix of players that are involved in tokenization. Traditional financial institutions are there, fintech startups, and international organizations. You can basically technically tokenize anything you want. And in the report, we've had a few case studies I'll show in a second, but you can tokenize tangible or intangible assets such as financial instruments. And that is what we were interested in analyzing in our report. So we have a few case studies that we looked into. I will encourage you to take a look at the report when it is out, but we were interested in seeing how you can tokenize share of small and medium enterprises, arts and collectibles, a digital platform for exchange of private market assets, in other words, alternative investments, private equity, private credit, hedge fund. Can you tokenize these in smaller portions and offer them to a wider set of investors? Interbank payment operations, repos in the US, traditional equity funds, and again, a platform for the issuance and trading of private funds. These were all very, very interesting firms. I would encourage you to look into them because I've seen to an extent the future in some of those instances. So we will end with the benefits and the limitations to these processes. I think it's important to consider both aspects. The main benefits we were able to organize in three sections, right? Clearing and settlement, the plumbing, what you never see in those processes, right? The clear efficiency gains that are possible there, how information is shared and standardized, and how you can verify the ownership of those digital assets that sit on the blockchain. Transparency and compliance as well. It's interesting how you could use programmability to automate most of the controls that you need to effectuate on an ex-ante and real-time basis. That is very interesting. And fractionalization, as we've discussed, allowing for more market access through cost savings, lower restrictions, and online technological access. There's an argument as well, but we're still working on that concept, whether liquidity can be improved by creating specific secondary markets for those shares. But that is where also you can create a nexus with systemic risks. So we need to be careful about this as well. Limitations that we've seen from all those case studies and our work in tokenization, there are clear security and cyber security risks. The risk of fraud will get elevated, and it's paramount that investor education follows suit if you want to reduce the low-hanging fruit of potential fraud. Regulatory challenges we've mentioned, it's an international mess at the moment, how crypto is being regulated, largely misaligned. Jurisdictions have varied interests in it. We don't really know yet how definitions align. And it's not yet clear if we need completely new rule books or update the existing rule books, right? So again, for the regulators in the room and for professionals in the room, do think about this notion as well as you develop this market. Market infrastructure also not fully operational yet. A lot of fragmentation in the market that is causing issues like we've seen with some stable coins. For example, liquidity risk will be created between a mismatch of liquidity between the asset and the token. When there's a massive difference, you get into systemic risk territory. And the transmission of volatility between the digital market and the traditional market is something that we are growing increasingly concerned about. Lastly, access to private markets. It's an opportunity, and at the same time, it doesn't resolve any of the problem related to whether this is proper from a fiduciary standpoint. Is it suitable for the client? Is it appropriate? And the more sophisticated the investment is, however easy it is to access it, doesn't mean the person you sell it to will understand, right? So marketing and fair representation needs to be looked into. So these were the benefits and the possible limitations to consider to tokenization and digital finance development. So I will end here and conclude that digital finance has developed very rapidly, quicker than what I have personally ever seen in my career. The potential is very high to improve financial services and access to non-traditional investments. However, we should not conclude that digital finance is special. The same rules pertaining to fiduciary duty, right, and servicing your client needs first need to continue to apply. International regulation remains misaligned. Market infrastructure is still very fragmented, and there is a risk of contagion between crypto finance and traditional markets that should not be underestimated. So I would like to thank you all very much for allowing me to speak to you today. And I think my friend Alan Wetabe now will drive a Q&A session or provide with his own thoughts. Thank you all very much.
Wow, good morning. Good morning, morning. Olivier, thank you very much for that 1 hour masterclass on blockchain, DLT, digital finance. And allow me to start the Q&A by just asking a very naive question on my side. Looking through these slides and following the conversation, I worry as a non-tech individual working in regulation that for me to regulate digital finance, I need to have a master's or a PhD in crypto. Is that necessary? What can be done to allow non-technical regulators to appreciate this conversation such that then their role is visible? What can we do? Or are there ways in different jurisdictions how regulators have been able to appreciate and learn about this space before they can undertake regulation? Do you have any thoughts on that? We can start from there and then also invite other members in the audience if you have a question or two. We'll be using about 10 minutes for Q&A. So Olivier, in the meantime, what are your thoughts? This seems to be a very technical subject and most regulators may not have the knowledge to interface with it. What can we do differently to bring them on board?
But I will do my best to answer. As a matter of fact, I was in Washington, but also in Brussels and Paris not so long ago, and regulators are asking exactly the same question. Now, for the time being, the question is whether we've reached an inflection point past which those processes will be too complex for regulators as they are structured right now. Okay, but for the time being, the main way that regulators approach this conundrum that you've correctly presented is that there needs to be a human being, an entity, and a responsible person somewhere in the chain, okay? And that is how we can see that some regulatory frameworks are evolving, is that even if you claim decentralization, we will force that there be a responsible entity somewhere in that chain that is legally and regulatorily responsible. Okay, I'm making it sound probably easier than it is because this is at the core of the discussions that are taking place at the moment in Washington, but also in London. And the question is, when it is a purely decentralized network, say for example Bitcoin or others, who is responsible, right? Well, you can find workarounds to address this problem, but I think inevitably, yes, Alan, sorry, regulators will have to up their game on the technical and the technical and technological front by probably hiring specialists and probably find ways to insert themselves more directly into firms' own processes in order to have sight of what is going on. And when you complexify this picture by integrating AI into the mix, you can see how this is getting even more complicated. So to your point, yes, this is technical. No, regulators are not yet properly equipped. They will have to equip themselves with technical capacities. But I think a regulatory framework can ensure that we remain on top of, I would say, the chain of responsibility by guaranteeing that responsible humans and entities can be called upon and guarantee that they satisfy existing financial regulation or new regulation that pertain to the distribution of those services. It's a bad answer to your good question, Alan, but for now, that's the best I have.
I don't know if we have any question in the audience. We have an extra mic. Olivier, as we wait for a question from the audience, I share sentiments from regulators. A few of them believe digital finance is a fad that may pass. Is this something that is real? Is their fear warranted, or is it unnecessary? What can we do to address that particular obstacle? I have a second question for you, and I'm going to invite a good friend of mine here to share her question.
Hello, good morning everyone. I'm called Lillian. I'm the head of sales and marketing at National Housing, but I also serve on the board for the Real Estate Institute of East Africa. So anything real estate, I'm the person. But my question is, I'm not going to speak like my good friend Alan, because I'm not so much in the finance world, but somehow the synergies when it comes to finance and real estate kind of link. So my question is going to be Ugandan-based or East African. Well, we've had blockchain, we've had cryptocurrency. I'll start with the challenge is before regulators or the continent gets sensitized about some of these things, then there's a lot of fraud. Now, while Europe might be at a certain level, Africa, or let me say Uganda, we are at a lower level. So when I get someone talking about cryptocurrency, they don't know what they are talking about. And then when you finally meet the people who actually understand, the stories are completely different. It takes me to my question, and Alan tackled it a bit, that you see, if regulators don't understand how to regulate, then it becomes different. There's need to sensitize, but I'm going to go back to real estate. There are not very many developers or real estate agents or who are into or who understand the whole chain. I have a conference that is coming up, and I was trying to incorporate a bit of PropTech into the conference. But it has been a bit difficult because even people don't understand what I am talking about. So it takes me back to Alan's question that while we are all in the same room, what are we going to do about it? Yes, you said you gave a very, I will not say that, a very bad answer to a very good question, but this is something that we have to tackle, and I will try to stay when it comes to the real estate. How do we do the synergies to make sure that people actually understand what we are talking about? Because it is only in a small group that people will understand, but then the fraud will happen at a much bigger extent. Thank you very much.
Right, Olivier, I don't know if you managed to pick out a few points from our two submissions that you could respond to, and then we'll take other questions after your submission. Thank you.
Absolutely. Now, there's no, I would say there's no silver bullet here. And I'll use typical answers in the sense that you need to engage in investor education, you need to engage in communication. But unfortunately, this development, and going back to the first question, I do not think we're dealing with a fad here in the sense that the pervasiveness of digitalization cuts across multiple industries, not just finance. But I've seen technology take hold in finance at a speed and a pace that I had never seen before in my life, right? And quantitative analysis has been around for a very long time, but the acceleration in the penetration of technology and digitalization in finance is happening now at breakneck speed. So I do not think it is a fad. The question that could be correct is to ask whether we are clear, and that takes us to the next question that was asked: what form will it take? And this is where it is probably very fluid. Okay, from Bitcoin, we then switch to Ethereum, and we then switch to all kinds of processes, decentralized finance, lending and borrowing, that is making it clear that this is going to continue to transform, okay? And I completely agree that this is moving faster than probably regulatory authorities, finance ministries can probably determine, all right, we understand the concept now, it's going to be that for the forthcoming 10 years, so we're clear what we want to do. This needs to continue to stay reasonably flexible, but I would urge that we focus on some key fundamental practices, and we've discussed those even at CFA Institute in other jurisdictions. For example, even in the UK, the concept of financial influencers, you've got all these people online who are recommending all kinds of new forms of investments. Can we not exert a little bit of control over the messaging there, because it would not be a stretch to conclude that what they do is financial advice. So you need to be very careful with communication. And there we think, for example, platforms have a responsibility in ensuring that not any kind of message can make its way online. So you've got financial influencers, and then in parallel, you've got the concept of the gamification of financial services. If everyone has a little mobile device with little buttons on it, it becomes fun to just interact with all of those new possible investments. And if you find it fun, then maybe you will not have the right guardrails, or you might not ask yourself the right questions before investing. So you need to probably get in place lots of serious communications from the top 10 regulators. Be mindful, this is not just game and fun. This is real money. You may lose all your money. We've seen in India the situation of the retailization of lots of those products. It's alarming. Regulators in India, the Ministry of Finance, that we're discussing ways to address these issues. But in the end, for regulators, it comes down to probably focusing on key fundamental concept, fiduciary duty. It is still an investment. And if you're in a position to give an advice, you have to follow basic rules. It also is about custody. Where are those assets? Who has oversight? And can you end up with a new FTX situation? And then are there sufficient risk management in place? And can we verify those processes as you propose those services? Again, it's a bad answer to two very good questions. So I'll just sum up. I don't think it's a fad. I also don't think it's set in stone. This industry will continue to transform, lots of potential, but we do not need to lose sight of very real risks that are not changing. Misrepresentation, false marketing, and unsuitable advice continue to be real risks, which cannot be special just because it's digital.
Right. Thank you. I think you have really given us some deep insights that we can think through. There is a question on Zoom, and I'm going to allow the individuals to ask their question in a minute. Before they come in, and I wanted to pick on something, Olivier, you said towards the end. Some influencers have indicated that we should allow the private sector to drive the innovation and proliferation of tokenization, stable coins, and all the other application. Though what we see in Africa is a preference for the government hand to drive the adoption. Where is the blend? What is the right mix of private sector innovation driving change and the government hand driving adoption? Do we have some thoughts on how African states can think about bringing on board the element of blockchain within our ecosystems? I will also allow the person online to ask their question, and then perhaps hear from you after that.
Okay, Alan, before they ask, we have a question here from Andrew. He's from Financial Sector Deepening Uganda.
Thank you very much, Moses. My name is Andrew, and I serve at FSDU. I would just like to know where has this worked, and what has it taken these different nations to bring it to that level? I know you've spoken about the different risks and the different things that are working against the blockchains, but would like to understand the different case studies of where it has worked and what steps have been taken by the different players in the market systems to bring this to life.
Now on Zoom we have Bits Finnovation. Bits Finnovation, your question please.
Thank you for the great moment shared. This is Timba Hussein, the founder of Bits Africa Innovation Consultants. Bits Africa Innovation Consultants, it's a company that started on iterating people around about the opportunities in the blockchain. My simple question goes to Olivier. How can somebody come into a franchise with CFA to see how we can offer certified documentation to our fellow citizens, so that once they pass through Bits Africa or any literacy program in our country, they can be having a professional certificate. Thank you so much.
Thank you very much. Olivier, over to you.
Actually, the questions work well in a sequence, I think. Or rather, I'll do 1, 3, and 2, if you allow me, Alan. Starting with yours, as usual, you're being tough on me, Alan, and it's a very good question. In other words, where do we establish the balance between government role and industry? I think it's fair to say, again, in my own experience, there's always a gap. Okay, it's been true since forever between the industry and the regulators that are controlling that industry. And regulators, by definition, are always a few bandwagons behind. That's how it works. You develop something and regulators then want to control it and regulate it. That's the nature of how this works. Now, when it comes to technology and finance, that delay and that gap has grown. Okay, it's very clear the industry and technology is moving way faster now than regulators are in a position to properly control what is going on. I think it would also be incorrect to demand that the government be the driving force of innovation and technological development. That's also what I mean by being technology neutral. I think in this case, my view was that the EU, with its framework, had gone a little bit too far ahead in imposing technological choices, right, or inferring regulation based on technological specific choices. I do not think that this will stand the test of time, but there needs to be a balance. And from the point of view of government and regulators, again, go back to my earlier point, which is it's not just about the technology, it's about the safeguards that we want for our own people. It may be great to access all of those new possibilities. We will not tolerate that this be done at the expense of people's trust in the system or people's trust in financial services. And in the end, that is really the crux of the matter. You want people to feel confident enough to engage, to invest in the economy without fearing that this will result in harm or in their being disadvantaged by rules that they do not understand. So it's probable that regulation needs to step in, not to slow it down, but to ensure that if you engage with real day-to-day individuals, investors, and savers, you will need to comply with a certain number of ground rules, which do not need to be any different because these are just digital services. In parallel, I think innovation should be, yes, completely encouraged, favored. And when those interesting developments are proving worth our while, then gradually integrated into the more mainstream services. There's a way to do this without causing too much harm and at the same time without discouraging the establishment of entrepreneurs that want to know they are part of an ecosystem that will support their own desire to develop technology that they can turn into business activity, which then gets to create a positive, virtuous circle with the local community. If I go to the third point first, because it's related to this, literacy programs, absolutely, this is critical. We've developed some of those programs at CFA Institute, but of course you have other providers out there. And yes, we would be, of course, delighted to discuss with local regulators if those programs can be offered at different levels. But I think this is absolutely necessary, basic financial education, and at the same time, probably more technologically oriented literacy programs, which do exist. We offer them, and other providers also offer them. I'll end with the second question on case studies and applications. So by any metric right now, digital finance is largely still a US story. Okay, I think it's 3/4 of all digital finance activity that takes place in the US, which is ironic given the mess that the regulatory framework is in the US on that, and given that the SEC has clamped down quite harshly on lots of those players. But this is where very much it's happening. But you see also developments in Asia. And in terms of case studies, I will encourage you to take a look at the paper that we will be releasing. Tokenization is very real right now. It's not very much widespread yet, but I've seen it in action. It actually works. And you can turn previously complex and non-accessible investments into smaller parts that you can sell completely on the platform, completely on chain, to investors that are willing to invest in them. You will also find case studies in the decentralized finance world, which is a little bit trickier in the sense that this is about using your existing tokens, whatever they are, lend them out and obtain return based on that lending activity, which, to be honest, regulators are worried about that because this is creating leverage, of course, and in the system as much as it is also creating liquidity. So there are case studies that are developing. It's not always yet completely compelling in the sense that aside from working within its own ecosystem of crypto holders, how does that add value to the wider community, or how do you transform an economy from where it is now to a digitalized one? This is not yet completely clarified, I have to say, hence why I thought this was a very good question. But the use of smart contracts, tokenization, automation of the operational chain in investment management, this is where I personally, and bear in mind, I'm personally a dinosaur here. I'm not necessarily a tech-savvy youngster. This is where I could personally see very much most of the potential to further decentralize the current traditional chain between those who have capital and there's those who need capital, with all the frictions in between caused by the scaffolding of various institutions that are involved. If you can essentially collapse that chain and retain the guardrails, the cost savings will actually transform into real efficiency gains without generating additional risks. Again, that's the proposition, and that's why I think regulators have a role to play to ensure that this happens in this way. I hope I've answered the question. Thank you.
Thank you very much, Olivier. Alan, I'll let you have the last word before we move on.
Thank you, Moses. Olivier, thank you very much for this well-written presentation. Gives us a lot of things to think about. The biggest value add for me is providing us real-world case studies, is particularly in the US, where tokenization is being applied in different asset classes. I've seen an example where tokenization is being used in commodities to tokenize commodity investing. Uganda as a country is rich in a number of mineral assets, but individuals and retail are not participating in that market because at the moment they are priced out. It's expensive for us as individuals, for example, to be in the gold trade. So with tokenization, these opportunities open up for us. We have agriculture where, again, as individuals, we are not participating in that value chain. So thank you very much for really opening our minds to the possibilities that exist. We are seeing that the technology is being deployed in the bigger markets, and it gives us an opportunity to leapfrog and also bring that and customize. Olivier, thank you very much for taking our difficult questions, and I hope you always be available to answer our questions as we go along, and we will connect with you on LinkedIn and other channels to be able to continue the conversations around how we domesticate blockchain technologies for Uganda. I will hand it back to Moses to do the closing. But Olivier, thank you very much, and we hope to see you in Kampala next year, and we can deepen this conversation as well. Thank you, Moses. Back to you.
So much. Let's hear it for Alan. Alan didn't introduce himself at the start. Alan is you know those people who are busy and important when you call their phone, eh? Alan is the Director of Investment at the Deposit Protection Fund of Uganda. Usually when I say somebody's title like that and designation, there's an applause in the room. The Director of Investment at the Deposit Protection Fund. Thank you so much, Alan, for your time. For everybody who's just joining us, thank you so much. Welcome to the Kampala Blockchain Summit 2024, made possible by our partners, the Blockchain Association of Uganda, Capital Savvy, the CFA Society of East Africa, and of course, BSV Blockchain. And where we are right now, Ndiro Coffee. I hope everybody has had a coffee. Have you had a coffee? You know they want you to have this coffee. It's free, right? Please drink the coffee. A word you're going to hear quite a bit as we're moving on is case studies. You know what case studies are? Eh? Let me explain it to you in words you'll understand. It is basically proof of concept. Let me explain. We all did mathematics in school, did we not? Hands up if you didn't do mathematics. we all did mathematics, right? We all love mathematics, right? We do love mathematics, Bolo. You love math? Come on, you can lie to me. You love math. I insist that the only universal language on the planet is mathematics. I may not speak Norska. I don't speak Hindi. But wherever I go, 1 + 1 is 2, is it not? Thank you very much. Now, for people who are wondering what these case studies are, case studies is basically somebody who took blockchain, utilized it, made it work, and therefore showed proof of concept. Mathematics. Show you're working. Remember, that's what a case study is. And to give us more about toolkits that we can use for development, allow me to introduce the people you're going to welcome next. The Director of Utilization at Blockchain BSV, you can see them there right there on the banner, Mr. Thomas Giacomo. Allow me to also welcome the Product Manager of Utilization at BSV Blockchain, Mr. Bolo Krzyzewski, and somebody who has more proof of concept than all of us in this room. From Kite Pesa, Joel Jewava. He's going to give us his Jemvude. Yeah, there's, I'll explain it later. But if you have a neighbor next to you who didn't get it, explain it to them. Joel, now is your time. Thank you very much. Thomas, Bolo, and Joel.
Hello, hello. Thank you, and thank you for welcoming us to the Kampala Blockchain Summit. So my name is Thomas Giacomo. I'm one of the directors at BSV Blockchain Association. BSV Blockchain Association is the open source governing body of the BSV blockchain. So we are developing open source components so that enterprises, governments, central banks can take these open source components and implement them into their business, right? That's what we do. Today I'm going to present you who we are, what is BSV Blockchain, what is the association, also to present you some use cases using our blockchain. And then I'm going to hand it over to my colleagues who are going to deep dive into one of the specific use cases called Kite Pesa. So BSV blockchain is a layer 1 proof of work UTXO-based blockchain. So it sounds a little bit technical, but what it means is that we are originally one of the 3 versions of Bitcoin. We took our distance from the Bitcoin core branch because we wanted to focus on technology rather than speculation. So we got rebranded BSV for Bitcoin Satoshi Vision to deliver the initial promise of Bitcoin, which is to deliver a digital cash system, right? That's what Bitcoin is about. So we implement Bitcoin protocol on a layer 1 blockchain through the different open source components, right? And the reason why I'm here today is to present you these open source components so that you, if you want to create a business in Uganda leveraging blockchain technology, you can take these open source components, implement them into your business, and run it. Hello? It's free. It's free, standardized. We are working with a lot of different international standard organizations. I will cover it later. But our goal is to foster the option to create a network and to propose the next iteration of internet with digital payment capabilities and with digital native payment capabilities to redefine the financial payment infrastructure. So as you can see on the right hand side of the slide, this is the way BSV blockchain works. So at the center, you have the core node network. We are releasing these days the next iteration of our node software called TerraNode. We tested TerraNode at 1 million transactions per second to provide you with some comparison capabilities. Visa is able to handle 60,000 transactions per second at peak. So we are releasing 1 million transactions per second because if we really want to be the underlying financial infrastructure for the entire international payment system, we need to be able to handle this kind of throughput capabilities. When we talk with different central banks, if you take the example of the Central Bank of the United Kingdom, they require 100,000 transactions per second just for the digital pound. So that's why on our side, we need to make sure that we are able to handle way more than that. So we're going to release 1 million transactions per second. It's already released in private beta in our network. And then progressively, we're going to increase according to the needs on the specific stakeholders building on our blockchain. So that's important because this is on the right-hand side at the middle, the core node network. So this is the node network, right? Handling the throughput capabilities. Basically, our network works in a way that at the center you have the core node network who are handling the throughput capabilities, the speed. And then around this core node network, you have additional components. I'm going to present each one of these additional components so that business can take these open source components and leverage them for their businesses. So obviously, our technology allows the tokenization, smart contract, wallets, all the different capabilities that the main blockchains do. But the main difference between our blockchain and the other ones is the speed, the cost, and the security. One of our mission is to deliver the most scalable, fast, and secure blockchain on Earth, so that everyone can build on top. Right? That's the main difference, and our main mission to deliver this layer 1 scalable blockchain. So the next slides will be a little bit technical. I will try to explain in a more business-oriented way for the non-technical of you, just to ensure that you understand how you can leverage these components for your business, right? And obviously, if you have some questions, we have a Q&A session at the end. I will be able to answer. I will try not to go too deep into the technical part of it, so that we can all grasp the different potential of these components. So before that, I would like to mention the different challenges that we would like to solve. The first challenge, if you use different blockchain networks, is the cost. Because the price of the different coins is quite high, the cost to use the network is high as well. On our side, we have miners on our chain who has a long-term low fee strategy because they rely on volume. At 1 million transactions per second, their business model is around volume and making sure that the more they have transactions, the more they make money. That's why they are able to propose very, very low transaction fees. We are talking about transaction fees at $0.00050, right? So it is, if you find cheaper blockchain on us, come to us and we will lower the price just to make sure that we stay the cheapest. One of the main challenges that we face, and that is related to the lot of feedback that we receive from businesses, is that for businesses it's complicated to run the blockchain infrastructure, right? And the way we design our network is to allow very minimal technical resource requirements at the edge of the network. So obviously, if you want to interact with our network, you will just take our open source wallets, and this open source wallet is very light. Because the wallet is not here to handle the speed and the transaction processing capabilities. It's just here to provide you with the access to the networks. The node networks and the miners will allow the network to handle the throughput capabilities. The third concerns, this is mainly brought by governments, central banks, with who we are working with. We are currently discussing with approximately between 8 and 10 central banks and different governments, is the privacy concerns. The privacy concern means that a lot of central bank governments, they chose a private blockchain, which is a nonsense because the overall purpose of blockchain is to bring transparency through a permissionless network. But obviously, we also gather this feedback and took into account as a business requirements. And we're going to present it to you a little bit later. But on our blockchain, you can have your private permission business environment leveraging the interoperability of a permissionless blockchain. So that's important to mention because that's our response to the concern of privacy related to government, central banks, or companies, they will have the ability to create their own permission network on top of which or on top of the permissionless network. So if I give you an example of that, we can imagine that the Central Bank of Uganda will be able to create a permission private network just for the Uganda shilling, and it will be interoperable with other digital versions of different currency using our network. And each central bank will have the ability to have their own private permission networks, making them interoperable through our permissionless capabilities. The last topic is the regulatory compliance topic. The reason why we wanted to bring that topic here today is a lot of blockchain rely on a non-fixed protocol, which is a concern, because if you are a business and the blockchain is always changing the protocol, it means that all the time you're going to have to adapt your application to this change of protocol. On our side, it's not the case. The protocol is fixed. The protocol is a good protocol. It's the Bitcoin protocol. So this is largely good enough to deliver a highly scalable layer 1 blockchain, so we won't change the rules. That's an important topic because it will allow you, if you want to build on top of our blockchain, to make sure that the protocol is stable, your application will be stable. That's a really important topic. There are also some legal implications on these fixed protocol topics. Because if you take the requirement from the SEC in the United States, because the protocol is fixed, the underlying coin is not considered as a security but as an utility token, because it will allow this coin to pass the OE test and not to be considered as a security. So these are the main challenges that we gathered along the years coming from businesses, governments and central banks, allowing us to redesign our network. So this year we have just redesigned our entire network to propose the most efficient networks with real business requirements. We didn't want to build the techs simply for building the best tech on Earth. We just wanted to make sure that we would solve real world problem and design a network accordingly. One of the main transition shifts that has been operated during the last years is to transition the association, so I'm part of the BSV association, to become the governing open source body of the blockchain. So we are what the Linux Foundation is for the operating system. We are the same for BSV blockchain. It means that we run open source programs. We are part of different international working group standard bodies. We are part of W3C. And we are discussing different standards when it comes to the digital identity and the DID standards. We are also part of ITF when it comes to the networks, from IPv6 Forum, IEEE, Linux Foundation. So the reason why I'm mentioning it is that because we are part of this international standard body, we are able to make sure that our blockchain will be aligned with international standards. For you, it's important to know, because if you build on our blockchain, you know that our blockchain will be aligned with international standards and with other IT systems. So that's an important topic. Obviously, the association is responsible of the protocol stewardship, meaning that, as I mentioned earlier, to provide you with some stability if you want to build on top of our blockchain, we are making sure that the protocol remains fixed, right? That's also an important topic. Obviously, we are involved in a lot of educational and research activities. We are partnering now with University College Zurich, University of Zurich, University College London, and other academic institutions. The way we do it, and if you are an academic institution in this room, come to us, because we are also launching different research programs to make sure that these research activities will benefit the ecosystem. In the ecosystem on that front, we have more than 1,500 patents which makes us one of the most innovative ecosystem in the world on the blockchain space. And we would like to keep this pace and keep this innovation, to leverage this innovation for you to be able to build on top of an innovative blockchain. And the last strategic pillar that we are handling is the lobbying or public affairs activities. Obviously, we are discussing the different regulatory frameworks with international regulatory body, but also at the European Union and different working groups when we try to explain in a simple terms what is blockchain, what blockchain is different than crypto, and so on. I won't explain it to you today because I'm sure that you know the difference, but obviously this is part of our job to make sure that we explain in simple terms the benefit of the technology for society. So that's a very important strategic move that has been operated, this open source move, because it allows you to make sure that when you build on our blockchain, you can use these open source components for free. The way we operate is that we are a corporate member-driven association based in the Crypto Valley in Zug, Switzerland. And obviously, the way we operate is that different companies of the ecosystem building on our blockchain finance the association to finance the open source components so that the other company can benefit from it and build on top of it, right? That's the way we operate, to also bring some transparency on that as well. I just wanted to clarify also the way it's just what I just said now, but basically we have now more than 400 vendors in our ecosystem. These vendors are part of different industries and vertical. As I just mentioned, some of these members, not all of them, and that's fine because we also want to foster innovation, finance the BSV Association so that BSV Association can handle open source program so that these open source components on the right-hand side of the slide can be used by companies, governments, and central banks, right? So that's an important slide showing the way we operate and showing how, as a business or as a public entity, you can use the open source components for your business for free. You don't have to pay for it because the reason why it's free for us is that we want to create a network. We don't want to create a product. We don't want to create a service. And if you want to create a network, you need to make sure that people will use the components of this network, right? So that's the reason why we are operating that way. So the next slide will be showcasing some of these open source components. I will try to present them in a business-oriented way so that you can also identify how you can leverage it for your business. I will cover different open source components, and then I will cover some of the use cases leveraging these open source components before a deep dive with Kite Pesa. So the first open source component is the token protocol. On BSV blockchain, you have a token protocol. As I mentioned earlier, we are a UTXO-based blockchain. What does it mean? UTXO stands for unspent transactions output. It means that you have basically two kinds. I mean, you have many more kinds of blockchain, but you have an account-based blockchain and a UTXO-based blockchain. An account-based blockchain is credit and debit. This is the way the existing banking infrastructure works. If you want to send money, you have to make sure that you synchronize the credit and debit on both sides, and then you do the operations. The problem with the account-based system is that if you really want to do it at scale, you cannot handle more than a certain amount of transactions per second. That's why the initial vision of Bitcoin was to propose a UTXO-based blockchain. A UTXO-based blockchain is basically digital cash. Digital cash is, if I bring you a physical banknote, you won't call my bank to ask my bank if I have the money to pay you. You will take my banknote, you will check if it's a real one, and you will accept it. That's the same with a UTXO-based blockchain. If I send you money using our BSV blockchain, the wallet directly will identify if the transaction is correctly built. Is it the first time that I saw it on the network? This transaction has already been spent? If it's the case, then I can accept the transaction. The purpose of this way of handling transaction is that you can have a lot of parallelized transactions, which makes our blockchain way more scalable than account-based blockchain. Account-based blockchain might be suitable for some of the use cases, and when we talk about wholesale CBDC, for instance, it might make sense to have an account-based blockchain, but for retail transaction, it doesn't make sense because you cannot handle the throughput capabilities. So on the left-hand side, on this slide, you have a typical blockchain transaction with input and output. So we took the example of a ticketing system. You are an event organizer and you want to sell tickets. You will create a token. Each token will represent one ticket. Each ticket will be embedded into the output of the transaction. The way our blockchain works is that the blockchain leverages the Bitcoin script programming language. So Bitcoin comes with a programming language called Bitcoin script. Bitcoin script is composed of different functions called opcodes, and these opcodes are unlocking conditions for a specific transaction. If I go back to my example, let's assume that I issue different tokens representing different tickets. If I send this ticket to the organizer of an event, the locking script will say, okay, am I allowed to resell this ticket? Yes. Then the ticket is sold to the organizer of the event. So these unlocking script capabilities, leveraging the opcodes function of Bitcoin scripts, allow you to transfer the token and to give the token any capabilities that you want. That's a really important topic because this is the way you can handle token on our blockchain. And obviously for each output, as you can see, you can then transfer the token to any participant of a certain value chain to ensure that the token will be transferred to the organizer of the event, to the customer, and to the event itself. This is the way tokens are handled on our blockchain. So obviously just on each output you have a certain unlocking conditions, and these unlocking conditions are handled by the opcode capabilities, which are the Bitcoin script functions. So it's a little bit technical. I hope that I didn't confuse you. Obviously, please ask me any question at the end of the presentation. We're going to have a Q&A session. The reason why I'm explaining that to you is to show that if you are coming and if you come to our blockchain and want to build, you can create tokens. Any kind of token using our blockchain. And the difference between our blockchain and other blockchains is that you can handle a lot of transactions at the same time in a parallel mode. What we were discussing yesterday with a lot of merchants in Kampala because we arrived 2 days ago, and to identify what problems our technology has to solve when it comes to payments or mobile payment services. And of course, the reason why we are in Kampala is that in Uganda, the mobile money is here for a while, and I think you are way more in advance than Europe on mobile money. And blockchain can just be the next iteration of the mobile money. The problem that we can solve using this system is basically offline payments. We can propose offline payment because this transaction might be parallelized. We can also propose lower transaction fees. That's also a pain point that we identified. And then the last pain points that we identified when we talked yesterday and the day before with different merchants and different people that we saw is also the cash in, cash out using the mobile money run by the telecom. So that's the different business pain points that can be solved with this technology, leveraging token capabilities. The next topic that I wanted to showcase today is how to leverage blockchain technology for data storage. Basically, one of the main benefits of the blockchain technology is to bring data integrity services. It's like the track option on Word or Excel. You want to make sure that you can access all the changes that have been made on one document to make sure that you bring transparency and that you allow different assets to be shared between different stakeholders. So that's the overall benefits of the blockchain technology when it comes to data storage. The way we approach that problem is that the way you can leverage our technology is that you can store your documents on your device, on your cloud service provider, and you will just use the blockchain to create a digital cryptographic version of your documents. And anyone who changes your document, you will see that this specific people change the document. You don't need to store the document on chain, even if you can do it on our chain, but it doesn't make sense. What makes sense is to make sure that you just log on our blockchain the change of the document. You don't log the document itself. That's an important element because when I try to explain what is blockchain to my mother or my father, I always say it's like an Excel sheet, but you can see all the changes on this Excel sheet. So that's the same for our technology. When it comes to data storage, you don't want to store all the changes on the blockchain. You want all the documents on the blockchain. You want only to store the changes. So these, the underlying technical component, it's called overlay services, who allow you to store your document wherever you want and just use the blockchain for data integration services and to make sure that there is a timestamp and no one can change the document, or if someone can change the document, you can see the changes of these documents. The other topic, I know that this term is quite, it's broadly used in the blockchain space. I just want also to bring our definition of smart contract. So, and my definition is a smart contract is not smart and it's not a contract. It's a dumb programming computer program. The overall goal of a smart contract is to automate and to propose automated workflow orchestration. What it means is that if you have a business process, you can code all the steps of this business process to automate all the steps. We can imagine that if you are a coffee producer, the smart contract handled by the coffee label on the organic space will issue a certain number of rules, and if each one of the rules is respected by the process, then you can go to the next steps. The reason why it's important is that it allows a pre-audit trail. So it means that you will reduce heavily your compliance check because you don't need to have an external entity just reviewing all the process, because the process will be already audited by the label itself. On our side, you can do all kind of smart contract. In the computer science world, one of the important topic is the Turing completeness of a certain IT system. A Turing complete system, it means that you can do all kind of calculation of computation on using a specific programming language. Bitcoin script is Turing complete. It means that you can do whatever you want using Bitcoin script. That's why this technology is so powerful. On our side, it's very simple. The Bitcoin script come with a lot of programming functions called opcodes, as I mentioned before. It's a very specific programming language called Bitcoin script, actually. But what we want is we don't want to have developers experts in blockchain. We want to have usual developers using their usual programming language. And one company of the ecosystem called Script has proposed a translation of Bitcoin programming language using a well-known developer framework called TypeScript. So if you want to come to our chain, you will just tell your developer, use your preferred programming language, and you will be able to leverage the smart contract capabilities of the BSV blockchain. I hope that I didn't lose you with that topic. The next topic is our open source wallet reference implementation called SPV wallet. Basically, what a wallet does in the blockchain space is it provides you with access to the network, and then to receive, send, store the different assets that you want to exchange within the network. What we've done at the association is that instead of having to go to the different wallet providers to ask them if they can provide you with some wallet services to access the network, we release this wallet reference implementation for free, so that any application coming to our chain can take these components, implement these components in their application, and they will interact with the blockchain. That's really important, because if you use these components, you will be able to access the network and obviously to leverage all the blockchain capabilities that I just mentioned before. I will say on the right-hand side, you have the way it works. For the technical people of you, this is the first ever implementation of the Section 8 of the Bitcoin white paper called Simplified Payment Verification. Basically, the way it works is that it provides instant transaction confirmation, leveraging the SPV capabilities. You just have to have a block header and a Merkle pass to ensure that your transaction is in a block, and it means that the transaction is validated. That was the technical part of the presentation. Of course, if you have some questions, happy to answer these questions afterwards. This is the current status of our ecosystem. So as I mentioned before, when we took our distance from the other versions of Bitcoin in 2018, we had to rebuild the entire ecosystem. So in 6 years, we rebuilt more than 400 companies worldwide, present in more than 20 countries. This ecosystem is growing. The reason why we are also here today is to make sure that if you guys are interested by leveraging our technology, come to us, or simply just go to our website and use our open source components. We can also direct you with some of the companies of the ecosystem that can provide you with support or with technical capabilities to make sure that we will extract the blockchain complexity so that you can focus on the real world problem and leverage the blockchain technology to solve business-oriented and real world problems. I wanted to highlight 4 use cases who are today leveraging our blockchain. The first one is called Chenti. I like this company. It's a Swiss-based company based in Zurich. So it's a Swiss franc stablecoin backed by a Swiss private bank called Dukas Copy. This is really powerful because this is one of the main, this is one of the rare regulated stablecoin using our blockchain. So we just wanted to also highlight it today because the stablecoin and also with the recent acquisition of Bridge by Stripe 2 weeks ago at $1.1 billion shows a lot of traction on this field. We personally think that the stablecoin or the e-money capabilities can be very useful in Uganda specifically to just propose the next iteration of the mobile money, leveraging offline payments and low transaction fees. That's something that will be covered by Kite Pesa just after this slide. So I will hand it over to them to explain it to you in more detail. The Tokenovate company is a UK-based company proposing a trading platform for financial derivative instruments, basically put, call, future, forward, and so on. So they are working with ISDA, which is one of the main financial regulatory body when it comes to financial instruments. And what they did is quite interesting. So ISDA, they created a digital version of the entire regulatory framework for the financial derivative industry. So Tokenovate, they translate this digital version of this regulatory framework into smart contracts to automate a lot of back office when it comes to financial derivative transactions. The main benefit is in terms of cost and efficiency, and they propose these services to pension funds, asset manager, and institutional funds as well. MinBlue is a Netherlands-based company who propose a wide range of services. I would like to mention today their carbon offsetting platform. The main benefits of using the blockchain technology is that you can standardize the different carbon offset leveraging the blockchain technology, and obviously you can automate a lot of back office work to make sure that you propose a more efficient and a worldwide marketplace to perform some carbon offsets leveraging the standardization capabilities of the blockchain technology. And the last use case that I wanted to mention is an N-chain use case. So N-chain is one of the most innovative company in our ecosystem. They have a digital identity solution aligned with W3C international standards when it comes to digital identity. So W3C is one of the main international standard body when it comes to the internet protocol itself, because at the beginning that was the original vision of the Web3 industry, to propose the next iteration of internet where people would be able to own their data instead of just interacting using the Web2 technology. So that's why we also partner with international standard body when it comes to the internet protocol itself. Enshade did the same, and they leverage this kind of discussion to adapt their digital identity solution to international standards, so that if you want to use our blockchain, you can go to N-chain. They will provide you with some N-chain identity services so that you can really leverage the real value of the blockchain technology. And I want to highlight the real value being the revolution of value when it comes to Web3 industry. So I just wanted to highlight these very briefly, these 4 use cases. Obviously, there are many more use cases using our network. And now I would like to hand it over to Jonathan and Bolo from Kite Pesa and the BSV Association. They will present you one of the use case called Kite Pesa, which provide e-money payment solutions in Uganda. Thank you very much.
Thank you, Thomas. Good morning, everyone. It's good to see you. My name is Jehovah Jonathan, project lead Kite Pesa. I'm going to leverage what he has just talked about. But before I begin, I would like to pose some questions for reflection. So if you were to put on the thinking hat, say of a business person, what ways, say for example Endiro, what ways can I improve the service that I'm providing to my customers? Can I include referrals? If someone brings another customer, can they get a cut? Can people pay me for less than nothing? Can I pay for my products without having to incur foreign exchange risk? So these are the questions that drove us to our interaction with BSV. Of course, apart from the fact that they're also free. So Kite Pesa is a payment innovation that is situated in Uganda. We're best to start in Uganda. We are a digital e-payment solution that is leveraging BSV to increase financial inclusion in Uganda. We are not reinventing the wheel. We are just making the rails more efficient, meaning that we are going to use the already existing legislation, which is the NPS Act of 2020, to create a stablecoin that is pegged 1-for-1 by the Uganda currency, UGX. So what is the state of financial inclusion in Uganda? According to FinScope, a FinScope study that for 2023, 81% of Ugandans have access to some sort of financial service. 62% of the population, 68, sorry, have access to something formal, which is banking, microfinance institutions, SACCOs, and 52% have access to informal financial services, which would be like if I went to one of my friends and asked them for some money, or informal money lenders. And as of 2023, 66% of the population has access to mobile money services. At the beginning, the president of the Blockchain Association mentioned that Africa is growing at a lightning speed, yeah? Which is evident by a study done by IMAC, showing that as of 2023, we had the global mobile money market size was close to 105 billion. But within the next decade, it's expected to be close to 1 trillion. So, and in Uganda, already we have 34 people with mobile money accounts, 34 million, sorry. And they are only supported by 2 major players, which is Airtel and MTN. So how are we going to help Uganda foster that growth from 105 to 960? That is where we Kite Pesa come in. So what are the existing challenges with our payment solutions in Uganda? Costly transactions, high minimum transaction amounts. The least I can send on mobile money is 500 shillings. What if I want to send less? Because now this opens up an avenue for very new and innovative business models. Service outages. There are times you want to send money to a loved one. The network is down. You have to wait a bit, then you can come back. Centralized data control, meaning that the data is held in one place. That presents a risk of a single point failure. That means that if that one central point fails, the whole system will suffer. A limited scope. Thomas mentioned smart contracts. I would like to pose to you an example, some offhand. Say I could initiate a standing order from my mobile wallet for, let's say, a subscription to Enduro. So we are limited by the amount of product offerings for our payment solutions. Allow me to invite my colleague Bolo to...
Hello everyone. Thank you for having me here. Let me concentrate on solutions and how can we respond to those problems addressed by Jonathan. First of all, our mission is to move money at the speed of the internet, like sending an email. We want to also enable people to send money as little as 10 shillings, which is currently possible but very costly and ineffective. Using blockchain also creates data privacy and security. When paying with a card, you're sharing with the multiple PSP and PSO operators name, surname, date of birth. In blockchain, it's just wallet address and amount of money. I know in Uganda there are 2 main systems. It's UNIS and Automated Clearing House. There are sessions. It improved moving money drastically, but it takes up to 24 hours to move money from one account to another. With the blockchain, we can do it substantially cheaper and the speed of the internet. Our solutions also pave the way to build on top innovative solutions, build financial inclusions, cater local growth. moving on, how can we locate our components into the locally working system? Already it was all said about the blockchain, BSV blockchain. I can add on top of that, it's not a monolith architecture. From technical standpoint, is a granular containerized architecture. So whatever is needed can be picked up, scale up, accommodated to current needs, which is a great advantage when developing such an extensive, difficult, technically complex solution. You don't have to change the whole system. You just take one or two parts and accommodate. Next, very important part of the BSV blockchain components are so-called overlay services. This is a bridge between blockchain, so like Web3, and currently existing Web2 applications. They enable companies, regulators, policymakers to implement their rules, their capabilities, and also enable reporting and auditing requirements in order to be fully compliant with the local regulations. What's more important, it's connected to blockchain, interoperable with blockchain from day one, and with outer world, with current and existing systems via API layer. Here I would like to just stop for a second and relate to my previous experience, because I had a pleasure and working with CBDC in Nigeria at INIRA project with American company, and not having such capability like handlers or overlay services and connecting them with the blockchain is enormous amount of time, expertise, and money. I know it from my hands-on experience. It takes even years and generates like millions of dollars of costs. With such solutions, this can be shortened to, I believe, weeks, maybe even days. What's next? As I mentioned before, on our current solution, payment system operators, payment system processors can build their innovative solutions like Kite Pesa. This might be cards, this might be mobile applications, and web applications. Last but not least, merchants and consumers, retail users will sign up to fintechs like Kite Pesa and gain direct access to e-money. All right, maybe you might think it sounds innovative, alluring even. What about evidence? What's going on the market? Let's start off with aforementioned by Thomas example of Stripe. And there is a quote from Patrick Collison saying that they want to create stable coins as a backbone system for their global payments. Stripe is a global payment system processor worth more than $60 billion US, and they acquired Bridge, the company that just launched 24 months ago for $1.5 billion, which operates with, offers extensive API and offers stable coins. Another example from the US. In the US, I think majority of us know PayPal system worth hundreds of billions of US dollars. They introduced They introduced recently Pi USD, PayPal dollar, backed one-to-one with dollar. And introduce to their system in order to send money at the speed of the internet globally. They are currently worth that the whole market cap of PayPal, it's 579 million. The data comes from yesterday. And what's interesting, they didn't build by themselves. It might seem that, okay, there was Elon Musk, they're worth billions of dollars, but no, stablecoins, building stablecoins is, it's very complex. It's very complex when it comes to technology, when it comes to compliance, legal. They contracted another American company called Paxos and asked them to help them. It didn't happen automatically. They had to work hand in hand. So there's no such capability that you just go, utilize API and build on top of it. Okay, enough about America. Let's get back to the African continent. Probably some of you heard about Naira, central bank digital currency in Nigeria. Despite the fact they were pioneering in this matter, African consortium consists of major banks. One of them, First Bank, the oldest bank in Nigeria, decided to build and run, this is very initial stage at the moment, CNGN, stablecoin, pegged and backed one-to-one with Naira. Jonathan, the microphone is yours.
Thank you. Thank you, Bolo. I know we've all had talks of a free trade area, which is going to be fostered by the Africa Continental Free Trade Area Agreement. Uganda was one of the first countries to sign off on this agreement, meaning that we see what is going to happen in the future. This agreement is supposed to foster trade, cross-border trade. So where does Kite Pesa come in? That means that now I can pay for goods in Kenya, in any country that has signed this agreement, at low transaction costs, with low forex risk, and in real time. And this will foster their mandate, the mandate of the agreement, which is economic integration, removing of trade barriers, industrialization, global trade, and of course, welfare, which is socio-economic development. Where are we as Kite Pesa today? Which is, I'm sure that's the question that most of you have been asking yourselves. We pitched our product, or launched our product, at the London Blockchain Conference earlier this year. And we were among the few companies that were selected at the Africa FinTech Summit to pitch our idea and our dream. Now, we are here at Endiro, sharing our idea with like-minded individuals, hoping that you can buy into our dream. Thank you very much. And I urge you to keep on asking yourselves what we can do better to make Uganda a better place for both the merchants, the business people, and individuals as a whole. Thank you.
Thank you, Jonathan. Thank you, Bolo. It's the team from BSV Blockchain. We're going to take some questions from the house. If you have any questions that you may have for this team from what they have been talking about. Mr. President.
Thank you, Moses. My question goes to Thomas. The gentleman who was seated on my right, George, who is representing the CFA Society of East Africa. I'm only asking this question on his behalf because he just stepped out. But the question he had is, how does anyone sign up? He used the word sign up to the SPV wallet, any developer in the room, how can they leverage the toolbox that you just walked us through to develop their own products? And also, secondly, he asked, is it sector agnostic? Like, is it only for those innovating in the payment space? Or it could be, say, I'm in pharmaceuticals and I'm looking for a solution to trace whether it's counterfeit products, or coffee, as we spoke earlier. I want to trace my coffee from the farmer ready for export. Who in your opinion, should leverage your toolbox? Thank you.
Thank you for this question, Reginald. So,
Thomas, if I could add a part B to that question, because I'm particularly interested in coffee. You spoke about smart contracts. Smart contracts vis-a-vis the coffee farmer. If we can understand how blockchain then is a usable element in business, especially for the agriculturist, if you give us a case study, or maybe how it would work for a coffee farmer.
Yeah, thank you for these questions. These are very interesting questions. So for the SPV wallet side and basically all our toolbox, when you build a blockchain solution, it's not only blockchain. Blockchain is just part of the solution. You have to combine blockchain components and non-blockchain. You can, if still for your application, if you want to have any thank you. Any customer base, you can have the sign-up features on your application, and then you can just use the blockchain components directly embedded into your application. For the specific question of SPV wallet, so the SPV wallet is just a tool that we provide to access the network. You don't need to sign up. You just take the code, run it into your environment. So we have a specific partnership with AWS, so you can deploy it in one click on AWS services, and then you just link this wallet, which is just the access of the network, with your application. So there is no need to sign up. There is just some technical skills and capabilities just to implement your wallets into your application. So that's the purpose of the overall open source movement. So you can just take it, implement it into your application. If some of you, because that's the way it is, it's really, sometimes it can be very complicated to implement some of the blockchain components. You can come to us, we can introduce you to some companies of the ecosystem that will help you to integrate these open source components for your business. That's the ability, that's the way you guys can use these open source components and leverage them for your business. The way we articulate also these open source components is that we translated the code of these open source components in common programming language. So if we take the example of SPV wallets, it is developed in Go. Go is one of the main programming language specifically dedicated to the backend capabilities. So, but obviously there will be the translation of this SPV wallet in other programming language. So to answer the question of the sign-up process, when you want to build a blockchain solution, it's not only about blockchain, but if you want to integrate blockchain, you take our open source components, you run it on your existing cloud service provider, and you implement them into your solution, and you can handle the customer base directly in your application, and the SPV wallet will just connect to the different database capabilities of your application. And then, Reginald, for the second part of your question, to illustrate a little bit more how we can leverage a smart contract for a specific supply chain use case, or what kind of opportunities, on what kind of opportunities we can leverage the blockchain technology. So if I take the example of the traceability of the overall coffee making process, we can imagine, so one of the benefits will be to bring transparency for the end user. The end users I mean, that's the case in Switzerland, for instance. They also like to see some labels, organic labels or handmade or whatever the label that we can add. So we can imagine that the label entity will issue a smart contract. The smart contract will have a certain number of rules. The rules might be that the harvest duration should not exceed a certain amount of time, or the overall transportation should respect certain conditions or storage capabilities and so on. All these rules will be converted into smart contracts, and as soon as you have different stakeholders involved in the coffee making process, but also the distribution of the process, they will be able to write the specific steps of the process on-chain only if the step respect the condition of the smart contract, meaning that you are sure as the end customer that if the steps is written on chain, it means that it already respects the rules of the label entity, which will bring more transparency for the end user, reduce the cost for the overall supply chain when it comes to coffee traceability, and obviously provide more added value for the end customer. For the last question about how to leverage technology and which industry or verticals might be impacted, what I suggest, because I did the same, you write any industries, any verticals, and you write finance, KPMG, Deloitte, all the big four reports, and impact of blockchain technology. All the big four firms, they publish a lot of reports about the impact of the blockchain technology or of on a specific vertical or industry. The reality is that all verticals and industries will be impacted. The reason why it will be impacted is that the real impact of the blockchain technology is to propose an infrastructure change. It means that what we are currently doing is that we are rebuilding the internet. That's why all the industries and verticals will be impacted. Why do we have to rebuild the internet? Because internet, and I know that some of my colleagues will will cover this topic about it's an old technology, right? The reason, and there are a lot of problems with this technology, but basically one of the main problems of the current version of the internet is that the current version internet doesn't have digital native payment capabilities. And that's an issue. The second main problem is that there is no efficient digital rights and ownership system, also called tokens in the blockchain space. But if we forget the blockchain space for a while, what we are proposing is a new iteration of internet with digital native payment capabilities and efficient ownership and digital rights system. That's why all the industries and verticals will be impacted, because it's a major infrastructure change. We're going to have to change the way the internet protocol is designed, change the way we exchange information, and we always think about, you have different iterations of internet. First iteration, people consume data. Second, people consume data and produce data. And third iteration, the Web3 iteration, is people own data, right? So the real revolution of this technology is clearly the revolution of value after the revolution of information. The revolution of information was a really good revolution. We exchanged more data since 2001, since the history of humanity, so this is good. But now we have to bring a next iteration, which is the revolution of value, and that's the reason why all the industries and vertical will be impacted. We can think about the financial industry will be impacted by digital assets. You will have the ability to transform any assets into their digital version represented by a token. And today it's really easy to buy a stock exchange stock exchange shares, but tomorrow you will have the ability to buy shares of the bakery because on WhatsApp you will have the ability to buy the shares using a token at $1 or even less than $1 because the blockchain technology will allow a fractionalization of share ownership as small as a cent. In the healthcare industry, we can solve a lot of problems when it comes to patient data. The problem of the patient data is that when you go from one doctor to another, the doctor owns the data for you, and it's complicated to move one data from one doctor to another. With the blockchain technology, we change the paradigm, and the user of the network owns their data. So the interoperability and the move from one supplier to another or one doctor from another is easier because the final user owns the data. And I can continue in a lot of different, so I was mentioning coffee and the supply chain, finance, healthcare, but obviously there are many, many more use cases and verticals. As I mentioned, I really invite you to just take one of the big 4 reports, type the name of any industry with the name, with the word impact of blockchain technology beside, and you will see that I think that the BCG reported that in 2030, 10% of the global GDP will be represented through digital assets. So this is a major infrastructure change. It's not, we are talking about rebuilding the internet. So this is something that is, and we were discussing that yesterday and this morning. It's bigger than us, because if we are able to propose the next iteration internet solving the existing pain points, then we will improve every people's life.
Merci, Thomas. We have one question here from the house. If you have a question, please raise your hand and I'll come to you, okay?
Thank you. My question goes to Jonathan, and regarding Kite Pesa. What do you see as the unique selling proposition? You mentioned payment notionals, 500 UGX as a minimum for mobile money. You're implying you can go lower. What do you think are the unique features that attract users eventually?
All right, Jonathan, I'm going to ask you to hold. I have one. I saw a hand up here, sir. Just tell us who you are and who your question goes to.
Yes, my name is Tony Ninsim. My question to go to BSV team. So I wish to understand what would be what are likely to be the unintended outcome of your system, and how are you looking at overcoming them?
Any unintended consequences, and how you plan to mitigate them? I have a gentleman over here. Please just tell us who you are and who your question is going to.
My name is Masanda Ivan. My question is going to Mr. Jonathan. You have talked about Chite stablecoin, something about a stablecoin. So we have seen that USD stablecoin, they have a reserve. They are backed by $1. So what are you backing yours with? We need to know that. Another question is going to Mr. Thomas. We have seen very many layer 1 distributed ledgers facing a security risk. And I've seen that you're addressing key enterprise challenges with the BSV blockchain, but you didn't talk about your security risk challenge. How do you manage that? Because if BSV blockchain faces a 51% attack, what's your solution to that? Yeah, I need to know that.
Thank you very much. Hand it off to you, then you hand it.
Thank you so much. My name is Asaf Fundikwera, and this goes to Jonathan. Kite Pesa. Is Kite Pesa able to send crypto, or is it basically fiat? I didn't get that very well.
Thank you very much. My name is Diana Kulu from FSD Uganda. I have two quick questions to Kite Pesa. One is around similarly what the previous gentleman had shared. In your slide talking about the challenges as solutions, you said how you're focusing on micropayments of UGX 10 shillings. My question to you is, how is this solution aligned to what is happening on the market? Because as far as I know, in the reality of the Ugandan economy is that the cheapest thing that you can spend on, it costs about 100 shillings, which is a sweet or something around that. So how is Kite Pesa aligned to that? Secondly, you mentioned a challenge around a lack of opportunities for developers to innovate really fast, and you're leveraging on the BSV solution. Maybe you could enlighten me on whether it's the same kind of programming solutions that you need to develop, because I know that we currently have a skills gap in either developing around blockchain and cryptocurrency. So how is either MicroPay or BSV aligning or supporting the local community to be able to develop? I don't know if it's the same technology that you use, but if it's different, how are you doing that? Thank you.
Moses, can we at least answer some of these?
I was going to say that we first handle those questions. I don't know about you guys. Does the pressure increase or decrease?
Increases.
Please, BSV, way.
So I will start with the question from Asaf. No, can you remind me your name? Kite Pesa is a stablecoin that is going to be backed by the UGX. The reason why I say that we are not reinventing the wheel is that this is something that mobile money is already doing. When you send mobile money, you're actually not exchanging cash. What happens is that the mobile money is set up on an escrow account, similar to what we are doing. So we are backed 1-for-1 by the Uganda shilling. I don't know if that answers your question. Yeah. Then there was a question on, that's why we needed to. Oh, innovation. There was a question on the feasibility of micropayments. When you open the door for micropayments, you unlock a new universe of opportunities. Right now, the digital industry is growing. That means that for me, let's say I was an influencer. I can get paid for each click. That means that the way I charge you changes. I'm not going to charge you a lump sum. I can say that, okay, 500 people have liked this post that has a product of yours. That means that this is what I'm going to charge you. So the reason why, and I'm sure he's going to elaborate more on it, is that the fact that the money is smart and that we're able to innovate around that coin opens up a lot of opportunities for business people. That means that you can customize your product offerings and that you can offer much more than you're currently offering, not a? And, okay, then I will end with Patrick's question. What is different between what we are offering and what is already existing?
The USP.
Yeah. We are using BSB for starters as our foundation. But one, our transaction costs are low, significantly lower. Because of the big blocks and the amount of transactions that we can process, that means that we can charge much lower. And because of that, we offer a lot more for our clients. And I will reiterate what I had initially started with, to do with smart contracts. If I have a wallet, for example, that has the same efficiency as my bank account, the reason why we are not doing away with bank accounts is because there are things that you can do with your bank account that you cannot do with mobile money. For instance, the standing order. If I can have a subscription from my mobile money wallet, because most Ugandans, as you saw the percentage of financial inclusion, a lot of Ugandans are not banked. Of course, we've increased, but a lot of Ugandans are not yet banked. So if I can get similar features, yeah, say a smart contract. For example, another example of a smart contract would be if I'm giving out a loan, and the moment someone finishes their payment, the ownership of the asset is transferred back to them. That is something that Kite Pesa can do using BSV. Yeah.
All right, thank you, Jonathan. There was a question about the security risks and how you intend to mitigate them. I don't know if Bolo or Thomas will handle that. The education question is one that we want to expound on deeply, Madame from FSD. So Blockchain Association Uganda is going to answer your question for that one. For now, there was also a question on whether you are backed by crypto or fiat. That's another question for Kite Pesa as well. I think Bolo will handle that one. All right, so Thomas, security risk. We'll have you, Bolo, after that.
Yeah, thank you. Regarding the security aspects, in the blockchain space, the common way to handle security on the blockchain network is through decentralization. There is a